Hello, um, we are here. I'm here to talk to develop financial planning for commerce. Here is the template. Uh, here is the user guide. This is the user guide, and this is the economic assumptions. We start here. Here you can set the historic annual inflation. You write here 6 whatever, and automatically here is writing the expected annual inflation. This is the discount rate. It is we get the discount rate um, from this table of financing sources. Is enough to write here the equity capital, for example, 50,000 rands, and can be 10,000 rands, and bank loan could be, for example, 1,050, 1,050, 1,500 rands. Its count rate is 11%. Units sales volume would be 5,000 units. This is corporate income. This is the VAT. This goes directly to the financial planning. And this is the working hours calculation. Here you write the previous years, and the days, work days, Saturdays, Sundays, holidays, and work days. You write here, and this here is automatically calculated days, the full days of the year, and all this data, yeah, I'll use it here. This in this table, these tables, and here we must fill these working shifts. We must write here the working shift and working days per week, including Saturdays. All this work is to know how many hours will be worked per month. And this is the investment table. This is the investment table. We can write here what we want to, what tangible asset we want to buy. For example, we want to buy building a shop, and one it costs this, but we remember that in the financing funding, the total is one 11,500 rands. So this table, they must be the same value, would be 11,500 rands. Okay. Okay. Total overall investment. Okay. So we can here do the financial planning template. We start with the variable costs. Um, variable cost. Unity variable cost would be, for example, we want to sell shoes. Unit variable cost is of shoes is 100 grams, and then these 5,000 units come from the assumptions we talked about before, and automatically is calculated the average sales price. Yes, this is the inflation forecast. Okay, and the revenue volume is here. Here's the margin. We can set what is the margin we want. If 25%, I will put 50% because I have by choose by 50 by 20 200 rands. So data here, let's see if okay, the gross revenue volume is 1 million rand, so must be added the VAT. So we come to the assumptions here 60%. 60%. Okay, this is the VAT. Financial investment. For example, we have interests. We we forecasted our annual interest will be, for example, 1,000 rands. From rental properties, we will gain here 10,000 rands. 10,000 rands. Okay. Okay. Now we go to the indirect labor. Click here. For example, one director, and salary would be 2,000. Example, one example, 2,000 rands. Uh, Income tax would be 11 rands, 100 rands, and and okay. So we go back there. Here, automatically the social security, income tax was calculated and here. Now we go to the third party supplies. For example, we want to pay water. For example, water 200 monthly. So the value is here and go automatically here. Add expenses. I don't know. We can write them. And other thing, financing expenses. We have another template of financing expenses. We don't have now, but here is the reserve fund. If you want reserve fund, if you don't want, if you want reserve fund, here is the reserve fund, and okay, the project is viable because the net present value is positive. Net present value is profit. There are profit. Okay, there are profit. There are other indicators. Internal rate return is good. Is higher than the cost of capital. Is good, and the investment period payback fast recovery, and probability index, efficient profitability rate, grow over time, return on investment, profit, return over cost. So we have two here: projection of sensitivity analysis, and price breaking even point is 101 rands. This is the minimum price to get profit. The shoes must be sold over this price. The minimum quantity to pay the expenses. Minimum quantity to be sold to pay expenses is this. The minimum revenue to have is this. Okay. We have here about the financial controlling. To control finances, we have this monthly cash budget. Here the budgeted. Here is the performance. This is the variation. When you know it, you can take decisions. So we have a daily treasury budget. We can control. Yes, we can control it, budget it, performance. Oh, oh my god, budget, performance. Oh my god, budget it. I apologize. What's one moment? Yes, 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 yes. This is the variation, performance, budgeted, and we have here the